Let's now bring you the very latest in the world of business. Xolani Mbanjwa standing by. Xolani, good afternoon. We know as we look at some company news, Sasol has declared force majeure on the export of certain chemical products because of the impact of a heavy rainfall in KwaZulu-Natal.
Yes, force majeure basically means that I signed a contract with you and now I can't fulfill it due to unforeseen circumstances. We saw a lot of it, companies imposing it during the height and the start of COVID-19 in 2020. And this time around, I mean, Sasol is a company that exports a lot of coal, and they are seeing a lot of problems. If you remember, Transnet Freight Rail operationally imposed a force majeure as well because they were not sure how bad the impact and how widespread it was. Well, it is bad for Sasol, and they are warning that their Q4 results might be impacted by this. And the floods could not have come at a worse time, you know, when the group is also seeing a 28% rise in revenue and a demand for some of the chemicals. This is the world's biggest producer of fuel from coal, and this is going to actually do a lot of damage for them. So they've lifted their production rates. They've done very well, but as Rela Saskin says here next, that it's something that we might get to see with other companies, but certainly it's going to hurt the JSE-listed Sasol.
A mixed result from Sasol. A lot of it has been guided to previously and largely expected. On the energy side, which is largely based in South Africa, there's definitely improvements on the operational side. So at their last update in December, they spoke to operational challenges at Secunda in the mining division, where their coal stockpiles were lower than expected and they're having operational efficiency issues. That has now normalized, which is certainly positive, as that the mining business and the amount of coal they have feeds the rest of the Africa business. So that is normalized, and they're guiding that they're going to meet their year-end guidance, which is certainly positive. On the chemical side, strong revenue growth up 28%, and that's largely driven by price increases. As we know, oil prices much higher year on year, chemical prices much higher. But also they are seeing weaker demand coming out of their Eurasia business going forward, which is a negative impact. And that's really a consequence of the Russia-Ukraine war, as well as China in lockdown again. So it's impacting chemical demand.
Right. On the other end, Xolani, we know that the Foschini Group is also counting the costs of the heavy rains in KwaZulu-Natal.
Yes, 36 stores have been confirmed to have been damaged that belong to the Foschini Group. And although they say that this is bad for the operations, they're actually saying that it's not going to have any material impact on the group itself when it comes to the results that come out. So the group has also reported a strong trading performance in South Africa, the UK, Australia in the second half of the financial year. And this offset the impact of the July unrest in KwaZulu-Natal, because they actually were impacted as well just 9 months ago when it comes to that the unrest in KwaZulu-Natal, and they were still counting those costs. But they are saying this time around, although it is bad, 36 stores, it's not as bad that is going to impact on our profits. In fact, they see now that their profits are going to jump when they eventually announce their financial performance in the next couple of weeks. And Patrick Redelinghuys shares the same sentiment when it comes to 36 stores, but no material impact on their bottom line.
They mentioned that some 36 stores and a warehouse located in the province has been damaged, but on varying degrees. So they're kind of putting out a warning shot to say, look, guys, there has been an impact, there has been damage. We are definitely going to be impacted by this. So, you know, don't be surprised when the bad news comes out in the numbers later down the road. They did also, you know, put a trading update down showing that they had sort of earnings per share and headline earnings per share sort of growing by over 100% over the last 12 months. And this is just essentially as they start to recover from the government-induced lockdowns that we saw, you know, over the last 2 years or so. As, you know, we have fewer lockdowns and the recovery from COVID is starting to kick in. They're sort of returning to their normal operations. And of course now they've been hit by another bus. It's been a difficult time for South African businesses, particularly in KZN over the last 2 years.
And when it comes to Astral Foods, they're now having high expectations, expecting profits to shoot up, citing improved volumes.
Yeah, the improved operating environment for them, according to their trading statement, is quite good. They're expecting their profits, headline earnings per share, to rise by 140% for just the 6 months to the end of March. And they're saying that the improved poultry volumes is a result of a significant investment which had provided economy of scaled benefits for them. So they are producing chicken, and they are now struggling with the surging input costs when it comes to the war in Russia and Ukraine. You know, there is animal feed that is produced over there. There is wheat as well. They say those costs, they are actually struggling to contain them. So it's at 2/3 of their costs, particularly for broiler operations, and they are quite worried that the more the Russia-Ukraine conflict persists, the more it's going to have an impact on the prices that the price of chicken has to be sold. And this is not good for anybody, particularly low-income households, because chicken is the cheapest in a way. It's the cheapest form of protein or meat for low-income households. So that is not going to be good for them. But Rela Saskin at Benguela Global Fund Managers explains where Astral Foods is at this present moment.
So it was a positive update from Astral. They guided for earnings a bit earlier in the year. They said that earnings are expected to be up more than 100%. This statement today says earnings are expected to be up between 130 and 140%. So this was better than the initial expectations by the markets. The drivers behind the solid performance is an improvement in sales volume. Astral has gone through a couple of years of investing in their production capacity, and that's starting to benefit them. And also they've started to be able to push through price increases on their chicken products, so recovering some of the raw material increases we've seen come through over the last year.
And Mpo, if you look at what's happening in local and global markets, really it's all red. It's blood on the floor, if I can put it that way. You're looking at markets in Asia down 7%, the Nasdaq down 3.8%. Locally, you're looking at resources companies, mining companies down 6.2% for the day. Top 40 down as well, 3.7%. The all-share index, when you put it all together, 3.4% down. And the rand is not doing very well. It's still continuing on those losses from last week. Remember, last week was the biggest weekly loss by the rand against other major currencies. But don't take it from me. Take a look at how the markets are doing at this hour.